Welcome to another audit walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over Audit Area 1, and this is Section C1. This is a remembering and understanding topic. Identify the nature, scope, and objectives of the different types of audit engagements for issuers and non-issuers. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and check out our free 1-hour webinar training. We will teach you the key ingredients to passing the CPA exam. And again, it's free, it's only 1 hour, and it will save you so much time struggling with these exams. So make sure you check out that webinar. Also, just letting you know, we will only be going over 5 questions in today's video, but just letting you know, SuperfastCPA CPA Pro members get access to the full 10-question video in the member forum. So if you like this and you like our other material, make sure you check out becoming a SuperfastCPA CPA Pro member, because again, they get access to the full 10-question versions of these videos so that they can get a little bit more understanding and a little bit more practice. Now, with all that, let's dive straight into the questions. All right, here we are at question 1. Now, something I want to say about this video is we're going to be going over the nature, scope, and objectives of a whole bunch of different types of audits/audit engagements, but this is just the nature, scope, and objectives. We're not diving too deep into each of these. That will come in time when we actually get to each individual type of audit or engagement in other topics in audit. So we're just going over basically the nature, scope, and objectives of each of these. And again, you'll learn more about them in future videos when we dive deeper into each one individually. But let's dive into question 1. Which of the following is the primary objective of an integrated audit of an issuer? Okay, and remember, we talked about an issuer in a previous video. An issuer is basically a public company who has to file with the SEC. So again, what is the primary objective of an integrated audit? Let's read through the options. A, to express an opinion on the effectiveness of the entity's internal control over financial reporting and the fairness of its financial statements. B, to ensure compliance with all applicable federal and state laws. C, to provide limited assurance on the entity's financial statements, or D, to detect and prevent fraud within the organization. Now, if you have any idea what an integrated audit is, what an issuer is, then you might know the answer to this, but if not, that's okay. We're using these questions to learn the material. So let's go ahead and dive into the explanation to start learning about this. All right, here we are. The answer is A, to express an opinion on the effectiveness of the entity's internal control over financial reporting and the fairness of its financial statements. Okay, so that's one of the main objectives of an integrated audit. Now, let's talk about first what nature and scope even mean so that you can know that for the rest of the video. And then we're going to, of course, talk about the nature, scope, and objectives of an integrated audit. So let's go ahead and walk through this. In auditing, nature refers to the fundamental characteristics of the audit engagement, what it is, and its overall purpose. Scope refers to the boundaries and extent of the auditor's work, including what is covered, how it is performed, and the level of assurance provided. Basically, the way I like to think of it is nature is what the audit is supposed to accomplish, like what the purpose of the audit is. Scope is how you accomplish that. A scope is what you do in the audit and what it covers. So let's go ahead and talk about integrated audits specifically. First, we'll talk about the nature. An integrated audit combines the financial statement audit with an audit of internal controls over financial reporting, or that's an ICFR, required for issuers under the Sarbanes-Oxley Act. So an integrated audit is 2 audits basically at the same time, a financial statement audit with an internal controls audit. Scope, or again, what this encompasses of an integrated audit, assessing the design and operational effectiveness of ICFR, testing financial statement accuracy and conformity with GAAP, and ensuring that controls and financial processes are integrated and reliable. So again, you see the difference there. Nature is what the integrated audit is doing. Scope is how they're doing it. They're assessing the design, they're testing financial statement accuracy, they're ensuring controls and financial processes are integrated. Again, that's the difference between nature and scope, and I want you to remember that throughout the rest of the video. Now, objectives, and we kind of already talked about this. To express opinions on the effectiveness of ICFR and on whether the financial statements are free of material misstatement, and to identify and report material weaknesses in internal controls if there are any. And again, we're kind of at the beginning of audit. We're just learning about all of these things. You're going to learn a lot more about materiality, about material misstatements. You're going to learn a lot more about opinions and things like that. We're just getting the basic surface level of a lot of these things now, and we're going to dive more in depth as we make more videos. But again, that is the nature, scope, and objectives of an integrated audit, and typically that's for an issuer. Now let's go to the next question. All right, here we are at question 2. A compliance audit primarily aims to, would it be A, express an opinion on the fairness of the financial statements in accordance with GAAP? Is it B, determine whether the entity adheres to specific regulatory requirements? C, provide an opinion on the effectiveness of internal control over financial reporting? Or is it D, offer limited assurance on the entity's compliance with GAAP? Okay, so this is a different kind of audit. This is a compliance audit. Just based off the word compliance, you can probably kind of read through this and get a general idea of what you think the right answer might be. But if you don't know the answer, that's okay. If you want to give it a try, pause the video and read through this again to kind of form your own opinion. And when you're ready, come back, we'll look at the answer together. All right, here we are. The answer is B, determine whether the entity adheres to specific regulatory requirements. So that is what a compliance audit is for. Compliance audits provide assurance to stakeholders, such as government agencies or regulators, that the organization is meeting its legal and contractual obligations. So first, let's talk about the nature of a compliance audit. A compliance audit focuses on the entity's adherence to external requirements, such as laws, regulations, contracts, or grant agreements. These audits are common for government entities, nonprofits, and organizations receiving federal funding. Now let's talk about the scope. The scope depends on the regulatory framework or agreements being audited. It typically includes the following: reviewing policies, procedures, and controls to ensure compliance with specific criteria, testing transactions, records, or activities for compliance with applicable laws and regulations, and then reporting findings and identifying any areas of non-compliance. So again, nature is what it focuses on, scope is how you do it. Now let's talk about the objectives. To determine whether the entity has complied with the specified criteria, to identify instances of non-compliance that could have a material impact, and to report non-compliance to the appropriate oversight bodies or stakeholders, providing recommendations for corrective actions. So again, that is the nature, scope, and objectives of a compliance audit. It's a little bit different than an integrated audit. Now let's go to the next question. All right, here we are at question 3. Which of the following activities would most likely be included in the scope of a financial statement audit for a non-issuer? So now we're talking specifically about a financial statement audit for a non-issuer, and we're not talking about an issuer like we were talking about in the first question. What is the right answer? Is it option A, testing whether the entity complies with specific regulatory requirements, B, assessing whether financial statements are free from material misstatement, C, evaluating whether the entity's operations are efficient and effective, or is it D, reviewing the fairness of financial statements without performing substantive testing? Now again, just based on the fact that it's called a financial statement audit, you can probably narrow this down to one or two answers. So if you want, pause the video, think through this, and when you're ready, come back, we'll look at the answer together. All right, here we are. The answer is B, assessing whether financial statements are free from material misstatements. So that should make sense. That's probably makes sense that it would be called a financial statement audit. Let's walk through this. A financial statement audit for a non-issuer, so this is not a publicly traded company like an issuer, is an independent examination of an entity's financial statements to provide reasonable assurance that they are free from material misstatement, whether due to error or fraud. Below is an explanation of the nature, scope, and objectives. So let's talk about the nature first. A financial statement audit is performed by independent auditors and focuses solely on the financial statements. The auditor's responsibility is to provide reasonable assurance and issue an opinion on whether the financial statements are presented fairly in accordance with the applicable financial reporting framework such as GAAP. So again, the nature of it, basically an auditor is supposed to be looking at it to form an opinion on whether it's presented fairly. Now for the scope, on basically, again, how it's done by evaluating the entity's accounting policies and estimates for appropriateness, testing internal controls to the extent necessary for determining the reliability of financial reporting, performing substantive procedures such as verifying account balances and transaction details to gather sufficient and appropriate evidence, and considering the risk of material misstatement due to error or fraud. And basically the way I did it, each time there's a comma, that's kind of like a new aspect of the scope. So there was 4 different things that it covered there: accounting policies, reliability of financial reporting, performing substantive procedures, and considering the risk of material misstatement due to error or fraud. So that was the scope. Now let's talk about the objectives of a financial statement audit. The objectives are to express an opinion on whether the financial statements are free from material misstatement, to provide assurance to stakeholders such as owners, creditors, or investors that the financial statements can be relied upon for decision-making, and to identify and communicate significant deficiencies or material weaknesses in internal controls, if any, that could affect the reliability of the financial statements. And with that, we've covered the nature, scope, and objectives of a financial statement audit, mainly for a non-issuer, although of course you can do this for not just a non-issuer. Now with that, let's go to the next question. All right, here we are at question 4. Which of the following best describes the scope of a compilation engagement for a non-issuer? So let's walk through this. Is it A, the accountant issues a report expressing limited assurance on the financial statements? Is it B, the accountant prepares financial statements and provides no assurance on their accuracy? Is it C, the accountant performs detailed testing of transactions and balances to express an audit opinion? Or is it D, the accountant evaluates the internal controls of the entity and provides an assurance report? So again, this is a compilation engagement. This is a little bit different than an audit or a financial statement audit or those things that we talked about previously. This is slightly different. Now, if you know the answer, that's great. Or if you want to kind of think about this, think about what compilation means to you, then pause the video and kind of read through this. And when you're ready, come back. We will look at the answer together. All right, here we are. The answer is B, the accountant prepares financial statements and provides no assurance on their accuracy. That's part of the scope of a compilation engagement. So let's talk about this. A compilation engagement is the most basic type of engagement for financial statements, involving the preparation of financial statements without providing any form of assurance. And we haven't really talked about assurance or opinions. And again, we're going to get into that in future videos. But again, basically a compilation engagement means they are not providing anything saying that this is accurate or this is correct. No assurance. They're just preparing the financial statements. So let's talk about the nature of a compilation engagement. A compilation engagement is performed by an accountant who assists management in preparing and presenting financial statements in accordance with a specific reporting framework, such as GAAP. The engagement does not include testing, verification, or review of the information provided by management. So again, that's the nature of it. They're just putting together and presenting financial statements. Now, what is the scope of that? What are they doing? The accountant gathers information from management and organizes it into financial statement format. No procedures are performed to verify the accuracy or completeness of the information. The accountant then issues a report stating that no assurance is provided and that the financial statements are based on management's representations. So again, you are just putting together financial statements. You are not verifying anything. That's why it's just a compilation engagement. You're compiling stuff for the management, and that's all you're doing. Now let's talk about the objectives. To help management present financial information in the form of financial statements, so basically just to help them out, putting it together correctly. To ensure the financial statements are prepared in accordance with the chosen framework, and to clearly communicate that the accountant provides no assurance on the accuracy or reliability of the financial statements. Compilation engagements are typically used for entities that need basic financial statements prepared, but do not require the level of assurance provided by a review or audit. So they just need help putting together the financial statements, but they don't need people to verify anything for them. That's what a compilation engagement is about. That was the nature, scope, and objectives of a compilation engagement. Now let's go to the next question. All right, here we are at question 5. Which of the following procedures is most likely to be performed in a review engagement for a non-issuer? Okay, so this is something, again, a new type of engagement. This is a review engagement. And again, we're talking about non-issuers here, although you have to realize that all the things we've talked about, they can be applied to an issuer or a non-issuer or something else. But I'm kind of talking about the typical things we're applying it to, and we'll talk about that more in a second. But again, which of the following procedures is most likely to be performed in a review engagement? So let's look at the options. A, testing the operating effectiveness of internal controls. B, sending confirmations to verify account balances. C, performing analytical procedures and making inquiries of management. Or D, obtaining third-party evidence to support financial statement assertions. Okay, so if you have any idea what a review engagement is, that's great. If you don't know, let's go ahead and dive into the explanation to learn what it is. All right, here we are. The answer is C, performing analytical procedures and making inquiries of management. Out of those options, that one is the most likely to be one of the procedures during a review engagement. Now let's talk about review engagements. A review engagement provides limited assurance that no material modifications are necessary for the financial statements to conform to the applicable financial reporting framework. So basically that kind of talked about the nature. So let's talk a little bit more about the nature of a review engagement. A review engagement is a middle ground between a compilation and an audit. The accountant applies procedures to financial statements but does not perform substantive testing or obtain audit level evidence. The engagement results in limited assurance communicated in a review report. So again, it's limited. They aren't doing a super deep dive like they are in an audit, but they are doing a little bit, some small procedures to make sure that you have some reasonable assurance that it's correct. Now let's talk about the scope. Procedures are limited to analytical procedures such as ratio analysis, trend analysis, and inquiries of management. No testing of account balances, transactions, or internal controls is performed. This engagement does not include assessing fraud risks or verifying accuracy through third-party confirmations. So again, it's very basic, a very basic analytical procedure to give limited assurance about the financial statements. Let's talk about the objectives. And again, it kind of makes sense as you're reading through the nature and scope. The objectives kind of come naturally to provide limited assurance that the financial statements require no material modifications to be in accordance with the applicable reporting framework, to identify issues or concerns that suggest material misstatement may exist, and to communicate findings in a review report that clearly states the limited scope of the engagement. So again, that was the nature, scope, and objectives of a review engagement. We've talked about a few different types of audits and a few different types of engagements, all of their nature, scopes, and objectives. Now, before we do anything else, let's do one more part of the process called pillar topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping out, the things that keep coming up as you're going through the questions. These are the things that you've seen 2, 3, 4 times. Maybe something trying to teach you what a review engagement is, or whatever the case may be. And you notice these and you write them out in your own words. And as you are doing this each day, you are creating your own personal repository of the most important things you need to know for the exam in your own words based on what you learned from the questions. Now with that, let's go ahead and look at the pillar topics for this video. All right, here we are at the pillar topics. Let's go ahead and just read through them. First off, we're going to cover 2 things that are typically for issuers, but not always. And the first two are integrated audit and compliance audit. Again, a lot of times these are for issuers, but they don't have to be. They could be for a government entity. Sometimes they could even be for a non-issuer, but a lot of times this is for issuers, especially an integrated audit. Let's talk about an integrated audit. An integrated audit combines a financial statement audit and an audit of internal controls over financial reporting, or ICFR. And that's kind of the nature of an integrated audit. And the scope is testing the design and operating effectiveness of ICFR and evaluating financial statement accuracy. The objective is to provide reasonable assurance on both the effectiveness of ICFR and the fairness of the financial statements. Now let's talk about a compliance audit. A compliance audit assesses whether an entity adheres to specific laws, regulations, or contractual agreements by reviewing transactions, records, and activities for compliance and identifying material non-compliance. The nature and scope were kind of mixed there. Again, the nature is it's assessing whether they're adhering to specific laws, regulations, or contractual agreements, and the scope was by reviewing transactions, records, and activities. The objective is to determine compliance and report findings to oversight bodies. And you'll notice I'm kind of bolding some things to remember about these different types of audits or engagements. Integrated audit provides reasonable assurance about ICFR and fairness of financial statements. Compliance audit is about determining compliance with laws or regulations. Now let's talk about the other three things we covered. And these ones are typically for non-issuers, but again, not always. So a financial statement audit, a review engagement, a compilation engagement, typically for non-issuers, but it does not have to be that case. So, don't say that I said it was only for non-issuers, but again, typically that's who you're dealing with. Let's talk about financial statement audit. A financial statement audit provides a reasonable assurance that financial statements are free from material misstatement, and that was kind of the nature, through, and this is the scope, substantive testing of account balances, transactions, and disclosures. The objective is to express an opinion on whether the financial statements conform to the applicable framework. And again, we haven't really talked about opinions yet. That is a big thing that you need to learn in audit. And we're going to learn that in a video at some point, but that's not what we're talking about in this video. But again, financial statement audit, the whole point of it is to express an opinion on the fairness of the financial statements. Now let's talk about review engagements. A review engagement provides limited assurance that financial statements require no material modifications. And how does it do it? What's the scope? Using analytical procedures and inquiries of management without substantive testing or internal control evaluation. The objective is to issue a report offering limited assurance on the reliability of the financial statements. So again, keyword there, limited assurance. They're providing some assurance, so it's not a compilation engagement, but it's not a full-on audit. It's limited assurance because it's a review engagement. And then finally, let's talk about compilation engagements. A compilation engagement assists management in preparing financial statements by organizing information into financial statement format without testing or validating its accuracy. The objective is to present financial information clearly while disclosing that no assurance is provided. So again, there's kind of like that hierarchy there. There's a financial statement audit, like a full-on audit, where you are providing an opinion, you're going over things in detail. Then there's a review engagement, which is kind of in between an audit and a compilation engagement, where you're giving limited assurance. And then there's a compilation engagement where, again, you're just putting things together for management. There's no assurance provided. And those were the things we covered in this video. And we covered the nature, scope, and objectives of each of these. And with that, that was what we needed to cover in this video. Remember that we only went over 5 questions in today's video, but SuperfastCPA Pro members get access to the full 10-question video that I'm about to finish recording after this. So if you like this, remember that if you become a SuperfastCPA Pro member, you get access to a whole bunch of great materials, including the 10-question versions of these 5-question YouTube videos, so that you can get more practice and more understanding. One last thing to remember, make sure you go check out the SuperfastCPA training webinar on superfastcpa.com. It is 1 hour that will save you months and months of struggling with the CPA exam. Go check it out, and that will also be a good way to kind of get an understanding of how to become a pro member as well. So check that out. Check out becoming a pro member. I hope this video was helpful. If you did like it, make sure to like it and leave a comment. And with that, I will see you in the next video.